Hey YouTube, this is the Robinhood Investor. Today I want to talk about a company that reported earnings last week. That is company PepsiCo stock, ticker symbol PEP. Past year up 23.88%, past 5 years up 56.54%. So PepsiCo, it's been increasing relatively stable due to this being a consumer staple stock that's in the drink, beverage, and snacks and beverage. So it's pretty stable, consumer staple. This makes up 1.17% portfolio or $3,834. I'm up 40% on this position. Make sure you stick to the end of the video to get my opinion on this stock. So as I mentioned, PepsiCo manufactures, markets, and distributes sales, beverages, food, snacks. Pretty diverse portfolio, including Frito-Lay, Gatorade, Pepsi Cola, Quaker, and Tropicana. And this is a international company, so they're in North America, Latin America, Europe, Africa, Middle East, and so on. Taking a look at the market cap, it's a fairly large company at $230 billion. P ratio is 30, so it's pretty high considering relative to its growth. But dividend yield is 2.52, so it's pretty solid dividend stock. Taking a look at the analyst ratings, this is 52% of the analysts give it a buy rating versus 39% of it give it a hold. Taking a look at the earnings report, you can see PepsiCo full year results increased 12.9% year over year in terms of net revenue growth. Foreign exchange impact on net revenue 1%. Earnings per share is $5.49. Earnings per share change 7% increase year over year, which is different from fourth quarter. It decreased 28%, but great to see the year over year growth. Taking a look at the organic revenue growth, up 9.5% year over year. Core EPS $6.26, and constant currency earnings per share change 12% year over year. I like to take a look at the full year just to give it a overall trend. Versus if you take a look at the quarter, it might vary quarter over quarter depending on the seasonality and the climate of that season. And overall, pretty optimistic. 2021 accelerated the growth compared to previous years due to innovation, supply chain, go-to-market systems, and digitization and initiatives they're working on. It's a lot of improvements in the branding, innovation, supply chain, and they continue to be committed to some of their advantage capabilities. Scrolling down a bit, taking a look at the breakdown of the revenue performance fourth quarter. Frito-Lay North America, you can see GAAP reported change 13%. Quaker Foods North America 9% growth. PepsiCo Beverages North America 13%. Latin America up 16%, so it's great to see emerging market growing. Europe 8%, Africa, Middle East, South Asia 13%, and APAC region up 18%. Collectively, that's 12% increase in revenue. Taking a look at the volume, you can see overall convenient food up 4% for Frito-Lay, down 2% for Quaker Foods. Pepsi Beverage North America, you can see up 7%. Latin America up 9%. Asia, Africa, Middle East up 12%, and APAC up 7%. So it's great to see international region growing. The PepsiCo beverage tends to be growing more faster than the food, but it's okay. Overall, great to see that growth. Considering the size of PepsiCo, it's a very large company, and it's impressive to see that kind of growth, continual growth. Operating profits and earnings per share. So you can see reported change 10% for Frito-Lay North America, Quaker Foods 8%. PepsiCo Beverages North America down 10%, Latin America up 21%. Europe and Africa, Middle East, and South Asia down. Also APAC region down. Total, you can see down 9%. Earnings per share down 28%. So in terms of the operating profits and earnings per share, Seems to be negative in the international region, but domestically it looks good and great to see revenue increasing as well as the volume increasing. Taking a look at the PepsiCo key stats, you can see the trailing price to earnings ratio 28.68, which is pretty high for past 12 months. For PE at 24. Scrolling down a bit, you can see the dividend yield 2.55%. So it's great to see PepsiCo increase their dividend yield relative to 2.52%. Payout ratio of 77%, so it's pretty high. Anything above 50%, it's actually really high. You want to make sure that they're able to sustain that dividend. And taking a look at the profit margin, almost 10%. Operating margin, almost 15%. Return on assets, 7%, almost 8%. Return on equity, 51%. Revenue, almost $80 billion. Quarterly revenue growth up 12.4%, so it's great to see that. Gross profit of $42 billion. EBITDA, which is earnings before interest, tax, depreciation, amortization, $14 billion. Net income of 7.62% or billion. Quarterly earnings growth year over year, 28% negative. So in terms of some of their profitability, earnings per share decreasing, but their revenue is increasing. So it seems like PepsiCo, even though it's a consumer staple, it's trading pretty high price relative to earnings, and considering that the profitability is decreasing, total debt is $42 billion. Debt to equity is 262, so pretty high level of debt, and total cash $6 billion. So it's great to see that cash, considering that whenever there's times that are not good, they're able to sustain themselves in this climate. And operating cash flow of almost $12 billion, and levered free cash flow of $5.1 billion. So overall, I think PepsiCo, even though revenue is growing, their profitability is decreasing, and they continue to invest in a lot of their innovation, supply chain, digitization, and a lot of different initiatives. I am holding PepsiCo stock. I don't plan to increase my holding, but I do plan on holding this because I think it's a solid dividend stock. Continue to grow steadily in domestically and internationally. Profitability and earnings per share, it's a bit, it's not as impressive, but I think PepsiCo will continue to steadily grow, given that it's a consumer staple stock. That's all for this video. What are your thoughts on PepsiCo? Comment down below. We're going to use one of our links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. See you in the next video.